FOSPI is the index that is gaining the most in today's trading session.
Banks will hold the key because yesterday they did not participate. So let's see what the Bank Nifty does today. It's a lower start, you'd have to say. Mid-cap index is doing better. It's absolutely flat.
In aggregate, it is nothing great, but it's not bad.
The actions being taken by the US administration and the European Union against India for purchase of Russian oil are absolutely unjustified and unreasonable.
It's very difficult to do a deal with a mercurial person like him.
What are they targeting as a size of the liquidity surplus, and whether weighted average call rate versus SORR, which is the rate that they would likely to use for monetary policy target.
Current utilization levels, it's at about 75%.
We started flat, but now we've lost about 100 points. The Nifty is at the 24,600.
As a market leader, it is perhaps our responsibility to invest behind the category and not bother about maintaining share of voice.
A chartered accountant and commerce graduate, Rajiv Anand is a financial services veteran with over 35 years of experience. A CNBC-TV18 poll of top economists shows a clear split. Half expect a 25 basis point cut, while the other half say the MPC will hold rates steady.
Well, we are starting the show at the day's low for the Nifty. We have come off 170 points from the day's high. Well, it's an action-packed closing bell last hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbi and Nigel. Guys, unfortunately, yesterday's relief rally didn't hold up. You know, markets have been down from the word go and still down close to about 0.5%. So the Trump tariff, the renewed Trump tariff threats have hurt sentiment because global markets have been holding up okay.
Well, indeed, and that's why, in fact, the market continues to trade in a bit of a band. And, X of the Paytm trade, actually, today volumes are still lower. Okay. Yesterday as well, volumes were rather subdued. Yesterday, the volumes are the lowest in the last 1 month or so. So currently, it appears that very, very lackluster trade. These moves are coming on relatively lower volumes. As it is, the average volume for July was much lower than June. It was more than 15% lower. And in fact, the last two sessions, actually, it's been even lower. So I'm just looking at the volume chart right now. It's still relatively lower, given that you had a couple of large trades since morning.
And the rupee's weakness is not really helping sentiment, right? That's another bugbear, which now markets have to deal with. Foreign investors who are looking at India have to deal with, because there's been persistent weakness that we've been looking at today itself. But the fact is, on the brighter side, at least we didn't break yesterday's low. Yes, the Nifty, for a brief bit, did slip below the 24,600 handle, but then it's trying to sort of claw its way back. So let's see how it goes. We'll figure it out. But there is disappointment in the broader market. There's no denying that. The advance decline ratio is telling you that almost 2 stocks declining for every one that's advancing. So it's a weak session, and you're really trying to find out stories that are working. Not a very easy day of trade today. Let's tell you, we've got, of course, a packed next 1 hour lined up. So let's tell you what we have coming up for you on the show. We're, of course, putting a lot of the big movers in the spotlight today, and Godfrey Phillips is one of them, flying after the Q1 numbers coming in. So what's worked for the stock, what's the street commentary, we'll tell you in just a bit. Lots of other stocks in focus as well. Plus, the big story that Yash is picking up, the possibility of more curbs in the futures and options market. What lies ahead? Look at the damage it's doing to a stock like BSC. Yash will join in on a lot of the source-based inputs that he's picking up. We're watching out for, of course, big earnings today. There's FMCG major Britannia coming up. Bharti Airtel all set to report after the bell as well. So a quick sneak peek into what these biggies could deliver. And then, of course, a lot of other earnings. Like I said, today is a very stock-specific day when we're talking about earnings. Triveni is down. Siemens Energy has been up. The commentary from Siemens has been very positive as well. So we'll talk about these two, a couple of others as well. So a packed 1 hour lined up ahead.
Well, I'm just looking at the global markets, So just Asia. Nikkei, that's the Japanese markets, ending with a gain of about 0.6%. Taiwan was up 1.2%. Hang Seng opened flat but closed with a gain of about 0.7%. Shanghai opened with a gain of 0.5%, ended with a gain of nearly about 1%. So Asia was firmly in the green, and Europe too has started off on a positive note. So the CAC is up marginally, up about 0.1%, 0.2%, but the DAX is up close to about 0.4%. So today's weakness in India, the reversal from yesterday's gains, is very specific to India, and it could be on the back of Trump making those statements to substantially raise the tariffs on India and penalize it for imports of Russia. And it's across the board selling. Banks continue to remain weak, but capital market stocks have been under pressure. The capital market index is down over 1%. You've got oil and gas down 1.25%, pharma, realty, all these indices are reeling with cuts of over 0.5%. IT bank, those two too, down nearly about 0.6%. Yeah.
Well, but a couple of stocks actually are seeing some kind of buying. Vishal Mega Mart, I'm looking at the intraday chart. That stock, in fact, has recovered some of its losses. Sona, BLW as well. I recall the stock was down 3%. That as well has seen a good recovery in trade. You have Orient Pro as well that's moving on relatively higher volumes as well. So select names from the broader markets are actually moving up. You pull up, an Aditya Birla Capital as well. Yesterday it was up 10%. Today it's not giving it away. It's still up in trade today. So numbers good, commentary good as well. Management, has given some confidence out there. The street is buying into that name.
There's DLS International, came out with numbers just a while back, strong numbers. Revenues up 44%, margins expanding to 29%, bottom line has gone up nearly 50%, and that stock moved up 5%.
Indeed. Quite a few names actually. Rima Newgen as well, another name that's up more than 10% in today's trading session. And you have Aditya Infotech, which is the newly listed company. We spoke to the management earlier today. That's up a whopping 60%. Enough of stock spotting. Let's get to Mitesh. Mitesh, your call has been bang on. This market is looking a little bit punctured. The structure itself has got punctured, and that's why you've been talking about shorting on bounces. What levels are you looking at on the downside, and what would make you change the stance?
Good afternoon. So I think one, the Nifty hasn't broken below the lows which we tested on Friday. I think, the Nifty is still holding about that. And I highlighted this in the morning that the problem could possibly come from the Bank Nifty. Purely because of, the fact that when I was looking at the chart components of HDFC Bank and ICICI Bank, which enjoy significant weightage in the Bank Nifty, both were, looking negative on the hourly, 2-hourly, and immediate setup. So I think that's what has happened today. The Bank Nifty is slightly outside underperforming the Nifty, and it's making a fresh slow. I think if the Bank Nifty does not manage to capture and close above 55,500, and the reason I'm highlighting this is because we have an event coming up, the RBI policy is coming up. Then I think it could be slightly negative for the Bank Nifty, and we could see a level maybe not really below 55,000, but close to about 54,700, 750 zone. So in that sense, the Bank Nifty is the index to keep a watch upon. The Nifty is still above this 24,500, 550 support area. So pretty okay with me. On the stock side, I have a buy on Pidilite with a stop at 29.80 for targets of 30.60, 30.65. While on the sell side is Policy Bazaar, which I would say is a sell with a stop at 17.70 for targets of 17.10.
Okay, Pidilite reports numbers. The street is expecting a pretty good quarter, 9% revenue growth, volume growth of about 8 to 10%. The company is targeting a double-digit volume growth every quarter, and the street will track, its entry into paints, etc., the developments on that front. 2% up. That's Mitesh's pick. MTAR tech numbers are up for you on your screen. The sky is rocketing. The profits have doubled, 14.8 crore. Look at the EBITDA jump, 72% increase in the company's EBITDA. The bottom line is up more than about 100%. Awaiting the revenue number, well, there is significant margin expansion. There is a 72% increase in EBITDA, margins at 18% versus 13%. But let's get a handle on Godfrey Phillips. That's clearly been one of the stocks in the day. Mangalam is the first to tell us that very strong revenue growth. Mangalam, more details?
38% revenue growth. The street likes that. In fact, we were working with good revenue growth largely because we had a peek into what ITC did. ITC reported a 7% cigarette revenue growth along with 6% plus volume growth that was at a multi-quarter high. So the street believed that maybe all the other participants in the industry would do well as well. And Godfrey Phillips has been doing well over the last 13 or 14 quarters as compared to ITC. So they've been slowly gaining market share. And at a time when leaf tobacco inflation would erode margins for all the tobacco companies, the only thing that will save you on an absolute basis is revenue growth. And that's exactly what has come by. So, despite a margin compression of nearly 230 basis points, the company's EBITDA has grown 25% year on year. And that's on the back of a 37% revenue growth. And the net profit also has grown at 25%. And given the current consumer sentiment and environment, if someone told you that there was a consumption company, not commenting on the nature of that, But there is a company that grows at 38% revenue and 25% profitability. The street would take that with both hands, and that's exactly what is taking place on Godfrey Phillips, not just this quarter, the last few quarters as well, and which is why the stock is up nearly 90% this year, and before that as well, we've seen a big move. Add to this, the board has also gone ahead and announced a bonus 2:1 for all the shareholders, so that stock doing well in today's trading session, along with doing well all through this year.
Yeah, that's an important point, actually, the fact that the bonus also is chipping in with the good vibes, so to speak, when it comes to Godfrey's performance.
On Godfrey Phillips, on July 23rd on Bazaar itself, in our morning chat, we highlighted that there was a big amount of delivery-based buying, which was much higher than what it normally was at. And also the read-through from Philip Morris's international call that they had on the India business was particularly positive. Keep in mind, the global company was down 7%. But, the read-through was good, and that's why we had highlighted about the delivery-based buying. It had crossed a couple of technical levels, and now you have the numbers that are quite good. So it's shaped up quite well, and as Manglam said, the stock has had a big run. But just want to alert our viewers at around 8 a.m. on 23rd of July, we had spotted the stock as well.
Yeah, absolutely. I mean, and that's Godfrey. Actually, it's been a string of not such bad news from consumer companies. Remember, we were discussing Marico at the same time yesterday with its 9% volume growth. And up next is now Britannia. So is the cookie going to be crispy, Manglam?
Likely to be crispy. Let's see whether it bakes well in the middle or not. By the middle, I mean the EBITDA margin. The reason why I say that is because, revenue growth is likely to be decent. 7.5% is what the street is working with. The street knows that, this time around the stock has gone into numbers with good, expectations. Notwithstanding today's down move for the year, it's up around over 20%, which is better than what the other consumer peers have done as well. Little under 4,600 crores on the top line. The EBITDA grows by around 8%. The gross margins are likely to be compressed, largely because of volatility that we're seeing in raw material prices. But the company has a very strong cost elimination plan as well. So that could keep their EBITDA margin stable at that around 17.7 to 17.8% mark. The net profit on the back of that grows by about 8 to 10% as well. Closer to 12% is what the street is working with this time around. More than the numbers, the commentary on how raw material prices are likely to pan out, how urban inflation is, or rather how urban environment is picking up, and at the same time what their plans are with the ancillary business is something that we'll be watching out for very, very closely for Britannia.
Okay, all right, got it. Thank you very much for that. Well, let's discuss some of these consumer names with our first guest on the show. Dharmesh Kant from Chola Securities is joining in. Dharmesh, I was just trying to jog my memory, and I think barring Colgate, not too many other companies have disappointed. Most have sounded optimistic about improvement in growth in the second half, including Lever for that matter. You like anything in FMCG, cigarettes, tobacco? Or let me expand that, even in Alcobev?
Yeah, good afternoon, Sobi. Thanks for having me on the show. I mean, the numbers have been okay type of numbers as far as FMCGs are concerned, and it's more to do with the market situation in which we are. So a flight to safety kind of numbers is being always liked by the markets. My own sense is even Q2 would be a difficult quarter for most of these companies. I mean, the margin contraction will be seen, and the way we have seen in Q1. So there won't be any, elbow room out there as far as the margins are concerned. Volume would be around 5-7% kind of a growth. So commentary wise, they sounded, cautiously optimistic rather than very optimistic on the prospect. Given the fact that valuations are still very rich and they are trading at, higher end of the valuation multiples, higher price action would be very unlikely. As far as cigarette division is concerned, one aspect is very clear. The premium segment has been doing very well. Even ITC, the premium segment sales, cigarette sales were much better than what they were. So I think here one can play a bet on ITC rather than Godfrey Phillips. The stock has done a phenomenal run-up. The numbers were excellent. But going forward, given the type of performance we have seen in ITC, it values more merit with the valuation multiples at around 19 times 1 year forward as compared to, say, Godfrey Phillips, which is 40 times 1 year forward. So with other businesses filing in by, say, Q3, Q4, I do expect ITC to give a price action of 15-20%. So that's a better bet in the entire FMCG space. Others, I think, is just more of a trading play for a day or two.
Okay, so betting on ITC, that's where you could have a return of about 15-20%. Berger Paint numbers are up for your screen right now. We've got the profit number. Profits down 11% to 315 crore. Revenues have gone up 3.6% to 3,200 crore, but the bottom line has taken a hit. EBITDA is also up 1.2%. So we'll wait by to see. Part of the reason is there will be some margin compression because the EBITDA growth is less than the revenue growth, 50 basis points of margin compression. But we wait by to see if there is any other item impacting the bottom line. Stock is down over 1%. But let's get to the other big story. Sources tell CNBC-TV18 the finance ministry is in talks with SEBI to take steps to reduce options market speculation. This news that Yash has put out has taken the stocks lower. BSE is down 5%. Many other capital market players under pressure. Yash joins in with the details.
Well, Rima, we had reported this earlier that market regulator SEBI is working and looking out for ways in which it can reduce options market trading and the speculation there. And as against that, actually focus on increasing the volumes in the cash market. Now, what we've been given to understand from our sources is that the finance ministry has also sort of, been in discussion with market regulator SEBI with the same agenda that options volumes and the speculation there needs to be reduced. On the other hand, cash market volumes need to be increased. According to our sources, the finance ministry is of the view that options market volumes or the transactions there is not meaningfully adding to any productive side of the economy. In fact, it is not even being effectively used for hedging and only being used for speculation, whereas cash market volumes and the transactions there would actually add to the productive economy. It is with this rationale and indication that Finance Ministry is in discussion with market regulator SEBI to explore ways, asking SEBI to explore ways to look at how options volume can be reduced. Now, there are three important suggestions which market regulator SEBI is also considering to reduce options market volume. The first one is with respect to the expiry itself. We have weekly options expiry. Market regulator SEBI is likely to consider an option to make this weekly expiry and turn it into a fortnightly, which is every 15 days, or even a monthly expiry if needed, which will help them reduce the options market speculation and the volume. The second option is to sort of propose or ask the government to reduce securities transaction tax or STT on cash market volumes, essentially to incentivize cash market volumes, which will automatically bring down the options market volumes. The third one is to reduce the margin requirement on the cash market transaction side as compared to the options market. These three are important suggestions which market regulator SEBI is considering. It is likely that it could come out with a consultation paper with regards to the same proposals and its suggestions. And of course, once consultation paper is given out, after taking stakeholder views, the market regulator could take it to its board to approve the final regulations here.
Okay, Yash, got it. So basically, from what you're picking up, it seems that the regulator is not entirely done in terms of trying to cool the action and the excitement in the F&O market. Thank you. We'll take that forward with our guests. BSE is still down about 5% in today's trading action. Dharmesh, capital market stocks. Let's start with BSE and even some of the other wealth manager stocks like whether it's Angel, whether it's Nuvama. What's your sense? Because there is, that's true. There's immense regulatory overhang that continues, at least on the derivatives market. So do you feel that it could impact volumes lower? Volumes have just started recovering for most of these players.
In fact, Survey volumes are very down. They are gradually shifting on the downward trajectory, and last 3-4 days was also very bad. And the volume wise, the type of market we are in, even if regulator doesn't do anything, the volumes are going to, they are drying up. What I understand is regulators want options to be a more of a hedging kind of a mechanism rather than a play on the market. And if that is the sense of direction in which they are moving into, then definitely more stringent regulations are likely to come forward, and that will further curb the volume activity on derivative segment. So this is bad for brokers. People who are into direct equity broking and whether it is options trading, that is bad for that. But as far as wealth managers are concerned, wealth management companies or asset managers are concerned, I don't think there's a problems out there. So AMCs are likely to do well. Wealth management companies are likely to do well. At the same time, exchanges, the revenues will come down. And see, the exchanges, BSE, MCX, the play is the visibility of the NSE listing comes through. So there will be a natural cool off on the prices of both MCX and BSE. To my mind, it should be around 35 to 40 times 1 year forward PE multiple. So that leaves a scope of around 15 to 20% more kind of a stock price correction for both these exchanges. So what we are advocating to our client is to go for AMCs like Nippon and SDFC. They are a better place in this market. They are a more stable place. So those options look far better off than direct plays on the broking companies like Motilal or Angel and the likes.
Okay, all right, got that, Dharmesh. Let's move on to all the other stocks that are buzzing on the back of their Q1 numbers. Sudarshan joins and he's collated a list. Sud?
So I'll start with Excited Industries, where earnings were largely in line with estimate. But what is the reason that stock is down? Because the commentary is looking mixed, especially companies saying that one concern that remains is the increasing raw material cost, and it believes that even going forward, raw material costs are expected to be higher. As far as earnings are concerned, profit was up 15%, revenue too has increased by 5%, EBITDA has jumped by 11%, and margin has expanded to 12.2% from the level of 11.5%. Next one is Siemens Energy. It has reported earnings for Q3, they call it Q3 SY25, and earnings were very strong, led by power transmission segment. This segment had seen revenue growth of 35%. Because of this, total revenue has increased by 20% and margin has increased by almost 500 basis points to 19.1%. Even order inflows were strong and have almost doubled to 3290 crore from almost 1700 crore. Next one is Aurobindo Pharma. Earnings for Q1 were weak, and that's the reason stock is down. Even in the commentary, though, companies saying that it will be able to manage margin what they had seen in FY25. Even revenue growth is saying that it would be in high single digit, but earnings were weak. Triveni Turbine, very weak set of earnings, and it was impacted by geopolitical tensions. Revenue was down 20%, EBITDA has fallen 23%, and even margin has dropped by 100 basis points. One company that has reported earnings just a few minutes ago, that is MTAR Tech, and stock is sharply higher, where revenue has increased by almost 22%, EBITDA too has jumped by 72%, and margin has seen a huge expansion, and that's up by almost 500 basis points. That's the reason stock is sharply higher.
Dharmesh, any of these stocks that Sudarshan was talking about in your portfolio where you're recommending a buy or you're looking to add, you're seeing a trend?
None of the stocks are there, but yeah, the space is there. I mean, defense is what we have been liking for a long time, and this correction which happened a couple of weeks back, we have utilized that correction to add on to the defense stock. And there, I think HAL and BAL still merits a long by standing. If you are having a vision of, say, again, it has to be 3 to 5 years, not a quarterly earnings. So this quarter, MTAR has reported a good set of earnings, but again, one should not be looking into quarter to quarter kind of earnings as far as defense stocks are concerned. So defense is a space which we are focused on. I mean, pharma Oro came out with numbers, but that were not good set of numbers. And same has been the case with most of the pharma companies, barring, say, Torrent, Mankind, or Cipla, which was in line. But again, the valuations of, if you look at Torrent Pharma or Mankind Pharma, is far ahead of its earnings trajectory, which they have been, pursuing. So that's a miss. So I mean, defense is a space which we are more invested into.
All right, and you're saying from the defense pack, what you like is HAL and BDL?
It's HAL, BEL.
BEL, got it, BEL. Very quickly, there's a lot of debate with regard to this solar module, solar cell makers. Y'all believe that there are brighter prospects for some of these names? Street is a little bit skittish about visibility in terms of earnings. Vari Energies is something that you like?
Yes, Nigel, we have come out with an initiating coverage on Vari Energies yesterday itself, and I will tell you the problem areas or gray areas. One is that oversupply of capacity has been talked about for India. So by 2030, 777 gigawatt of capacity should be there in India. And at that capacity, the per capita utilization will be around 1661 kilowatt hours for India, which is still 50% lower than the world average, which leaves you with all the permutation combination in place, 600 to 1100 gigawatt of more capacity to be installed. So that is concern number one, which people are debating about. We are on the side that it's not a concern. The second point is US related exposure of Vari Energies. They already have 1.6 gigawatt of facility in US. They are adding up 1.6 more. So this places them in a far ahead of their competitors where they don't have an exposure in US itself. And the third is the type of per capita consumption is going to go up by be it EVs or data centers or AI modules. They all consume more energies into play. With the capacities in place, ALMM is one area, DCR is another area. So Vari is best positioned to capture all the spaces because of their Already they are sitting on 13.3 gigawatt of capacity. By 2 years and that would be 22.5 gigawatt in India. That is solar modules, almost 15.4 on solar cell and 10 gigawatt in ingot and wafer. So I think positionally they are well placed. We are seeing an EPS of say 154 by FY27, almost doubling of the profits by then. And based on, even if you give a P multiple of 25, which is 40% discount to the current multiples, the immediate target price is 38.50. We will keep on re-rating or revising as the numbers roll by.
Okay, all right. We will leave it on that note. Tharmesh, thanks very much for joining in. Good to get your perspective on all of these stocks that we have discussed. We'll connect again soon. Well, we do have to take a break. And as we do that, here's a reminder for all our viewers. You can unlock a world of exclusivity, expertise, and influence. Become a member of CNBC TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, as well as curated lifestyle benefits. Welcome back. So, well, it's a bit lonely out there today because we are the only major market in red. Otherwise, the world has been a shade of green. But anyway, let's get to some more action. Hormuz is here. He'll always have something to excite us and, inspire us. Let's see what's on his buzzer's radar today. Hormuz.
Well, some interesting movers and mostly on the downside in today's session, of course. We'll start off with Gokaldas Exports, and for obvious reasons as well. The stock has been underperforming, and another 9% knocked off today, and it's declined in 4 out of the last 5 sessions. 11 lakh shares have already been traded here compared to a 20-day average of just 4 lakh. And this year already the stock is down almost 35%, most of it which has come in the last few days. But between 2020 and till date, the stock has already gone up 10x. So it's a big mover on the upside. From almost 70 rupees, the stock has gone up to almost 700 plus, giving up some of those gains this year. Prakash Industries is the other mover today. It's a result reaction on a day when most of the stocks in the red. That's up 12%. There's 1.8 crore shares have been traded compared to a 20-day average of 9 lakh. And historically, the month of August has been good for the stock. Every last 3 years, the month of August has yielded positive returns for Prakash Industries. Tanla Platforms is the other one on the positive side today. The stock has snapped a 4-day gaining streak. And take a look at the volumes here. 80 lakh shares on this 13% up move compared to a 20-day average of just 5 lakh. And as a result of this move, the stock has turned positive on a year-to-date basis after it declined almost 40% last year. In an era of living with Avenue Supermarts and D-Mart, Vishal Megamart has quietly made its move higher from its IPO price, another 3% higher today, almost 2.5 crore shares traded compared to a 20-day average of just over a crore. And from its IPO price of 78 rupees, the stock is already up 85% from those levels. And the last one on the list is Sanofi Consumer. It's another positive earnings reaction, and it is the biggest single day gain that the stock has seen since the end of June. But take a look at the volumes here. 2 lakh shares have been traded today, a 20-day average of just 3,000 shares. Very, very hectic activity in terms of trade on this stock. And as a result of this move today, the stock has also moved higher from its 200-day moving average. So there are some names that are bucking the trend, but the loneliness, as you mentioned, has keeping the Indian markets on the downside today.
Okay, all right, Hormuz, thanks very much. But like I said, always action on Hormuz's stocks board, no matter what the index is doing. Thank you for that. Well, let's bring in our next guest on the show then. Nikhil Ranka, CIO of Equity Alternatives at Nuvama Asset Management, is joining in. Nikhil, great to have you on. So the market in a bit of a funk, so to speak, kind of stuck. But, what's the sense you get? Looking at earnings, what is your assessment? Are we indeed poised for an earnings takeoff? Or should we just be happy if we don't get more downgrades, if we can do at least 9-10% this year?
So, good afternoon, Surbi. If you remember the last time I was on the show, markets were closer to 25,600 on the index. And we said the best case is that markets either time consolidate here or we correct till 24,800 levels, because on an FY27 basis, the fair value of Nifty itself was coming closer to 26,000, 26,200. And we've seen markets correcting 1,000 points from those levels. Now, if you actually look at it, 2-3 things have happened. One, inflation has come down, because of which, if you look at it this year, most likely our nominal GDP growth will be in single digit. And our markets have tracked the nominal GDP fairly closely in terms of returns. And even if you look at some of the macroeconomic indicators, be it electricity demand, auto sales, cement volume growth, for most of these macroeconomic parameters, what we are seeing is a single-digit growth. And therefore, my sense is we will have a period where, markets will be dull and range-bound for a fairly decent period of time, say probably next 2 quarters. And then from Q3 onwards, probably as markets start factoring in FY28 numbers, we roll over to FY28. From there, we should see markets take off. My base case is that for the next 2 quarters, markets will probably consolidate in this 24,500 to 25,500 band. Probably Q3 of this year is somewhere where we expect that markets will start moving higher.
Nikhil, hi. Lots of question marks surrounding the business model of IT. Just because IT companies did well over the last 2 decades, can they continue to re-engineer themselves and come out trumps at this current transformation juncture that they're in? What is your view? Because people are questioning, the existential crisis in a way, or they're saying it could be in a structural funk. Growth could be in mid-single digits over the medium term.
So, good afternoon, Rima. My sense is, Rima, our IT companies have been fairly resilient in terms of engineering their businesses models as and when the situation has demanded so. If you look at it, when we were at the peak of the tariff crisis, the prices that we are seeing on large cap IT names, probably TCS closer to 3,000, Infosys closer to 1,400 levels. We saw that prices when index was closer to 22,000 odd levels. And at that point of time, three things were not clear. One, whether FY26 will be a growth year for IT companies. And second, what sort of margin impact that these companies will have to take. As we have traversed through the 2 quarters, what we are seeing is one, clearly things are not as bad as they initially seemed to be. For most of the IT names, FY26 will have dollar revenue growth, maybe in low single digits. And margins also have been fairly stable in that sense. And if you look at valuations, most large cap IT names are now down below 20 times. If you look at the consensus EPS for TCS closer to 153, 154, Infosys closer to 75, 76 rupees, all these names are now starting to trade below 20 times. And my sense is from these levels, the absolute downside in these names clearly looks very, very limited to me. 2-3% more, and I don't think beyond that you will see. And the point is, the bulk of the FI selling that we have been seeing in the last 15-20 days has been concentrated in IT names, and therefore we are seeing that move on those stocks. My sense is once the selling ebbs, we should have some bounce back on IT names. They should head back 5 to 7% higher from these levels, with probably 2-3% more downside from these levels.
All right. Hi, Nikhil. Good afternoon. So IT is something that you like, various arguments, right? You look at the dividend yield, you look at the free cash flow yield, and you'll say, okay, it's a bullish argument. Or you look at the premium that the IT index trades at in comparison to the Nifty. It was around 30%. At the peak, it's 50%. It's come down to around 14.5 to around 15%. So various arguments supporting it out there. But the other pillar of the market, you're saying the Nifty bank can still correct 5% from here. Tell us the rationale.
So Nigel, if you look at the commentary from most of the banking names this quarter, 2-3 things have happened. If you look at the NIM decline that has happened this quarter, the commentary has been that the first rate cut of 25 bips has been completely passed through. The second rate cut of 50 bips, only a part of that has got passed. So Q2, again, for most of the large banking names, will see NIM decline to the extent of 10 to 15 basis points. And on the asset quality side, if you look at, whether be it Axis, Federal, everybody is starting to see some deterioration on the retail asset quality. So a combination of these two things would probably mean that banking names can at best have single-digit earnings growth in FY26 because your pre-provisioning profit growth itself will be in single-digit, and if you have some increase in credit cost on top of that, then double-digit earnings looks extremely difficult from current levels. And therefore, my sense is there could be 3-5% more downside from these levels in banking names. And post that, both IT and banking will be at multiples from where it will be very hard to build incremental downsides. And therefore, as I said, the base case still remains that 24,500 should hold for the markets. In an extreme case, we might go down to 24,200. But given the data points that we have now, doesn't look that we will go below 24,200.
Okay. All right. Just one more point with regard to cement. It's had a horrific last 1 year, but the stock prices didn't correct that much. However, there are green shoots now. Pricing, if I look at it, July to last July, it's up close to 8%. So there's some recovery on that front. If the economy is going to recover, the second half of the year will look good on volumes. Your view on the stocks are then, what do you like? JSW Cement, I was speaking to Parth Jindal yesterday, and he was sounding very optimistic. He would actually be lucky to come this year rather than last year, because last year, the industry itself, there was a lot of pessimism out there. But this year there is hope, and that could explain why he's coming at premium multiples. Let's see how the issue goes, but your view on cement.
So Nigel, the only sector where we have seen some sort of earnings upgrade or earnings beat this quarter has been cement. Now, the good part that has happened for cement is if you look at the overall industry of close to 600-650 million tons, almost 350 million tons is now consolidated in the hands of two players, Birla and Adani in that sense. And we saw this same thing happen with telecom also, that, as the industry structure move towards more oligopoly, pricing is something that starts looking up. My sense is the same thing will start happening for cement also, and incrementally the flow through to EBITDA is extremely high even in case of cement, because the costs more or less are pretty fixed in nature in that sense. And coal obviously is not seeing any upside to that extent. So therefore, as the industry consolidates and we have some price hikes towards the second half, because Q2 obviously is a monsoon quarter, so one cannot expect large price hikes that will come through in that quarter. Q3 onwards, my sense is the pricing will start moving higher, and for a lot of companies, then 1,000 rupees per ton will more or less become a base. And the industry will start looking to move towards 1,400 to 1,500 rupees of EBITDA per ton. We've clearly been hearing from con calls of most large cement companies that 1,500 rupees per ton is a number that they want to achieve over the next 18 to 24 months. And that should lead to some sort of excitement on the street for cement names. And therefore, we are positive on cement companies from these levels.
Nikhil, thank you very much for that. That's the view coming in. Let's get a handle on what's happening in the futures and options space and what the trends are. Mangalam joins in.
Well, the market's grinding lower, no two ways about that. We're looking at, the frontline indices track lower levels. But the good part is, or the one, area of support is that today's high and low on the Nifty are pretty much in line with what we've seen during the series. So we haven't, broken out or broken down below that as well. Yes, the Nifty is down about 83 points. We have the sensex, which is lower as well. But today's high, 24,733. And you look at the low today, 24,592. Compare that to the low that we've seen, on day one of the series, and the high that we saw yesterday, pretty much in line. Yesterday's high was 24,736 and August 1st low was 24,535. And this is the broader range that the street expects will play out, at least for the very near future, because that's where option writers are placing their bets as well. Look at the 24,700 call that comes up for you, 65 rupees in premium, telling you that over 24,750 or 24,765, you would see some sort of supply start to come in. And remember, the option price out there has come down as well. At the lower level, though, we have the 24,600 put writers equally active as well. And they believe that around 24,525 or 24,550, there could be some support which will come by. For those who are looking to pocket the premium that is available at the 24,650 straddle, which is a call and a put together, this morning that straddle was available for about 200 rupees. So the broader range that they were looking at was 200 points on either side of 24,650, which is basically 24,450 to 24,850. Now the premium on that has come down as well by about 30 points on the entire straddle. Just a couple of stocks which are deserving mention right now. A bunch of them seeing a lot of long positions being added. Uno Minda, one of them, since morning has seen a lot of long positions being added. And Pidilite reports its numbers tomorrow. And it was just this afternoon where we saw a big spike on the stock and presumably some long positions being taken ahead of numbers on Pidilite. Though on the short side, BSE has been well sold throughout today's trading session. LIC Housing Finance and very recently Info Edge comes up as well with a lot of open interest spike and positions added on the short side. So for the Nifty, while it is lower right now, it's a range that the street is hoping will continue to play out. Individual stocks, all of them in focus.
Okay, all right, Mangalam, thanks a lot for that. As you said, the markets are grinding lower, but, at lower levels, you're seeing some kind of buying. And as we speak now, the Nifty actually has cut its losses by half. So there is some hope. Maybe, in fact, the street senses that maybe Mr. Trump, just maybe, could soften his stance and we could have a deal in the next few days, which is better than what we have heard so far. Slip into a short break. On the other side, Nimesh is waiting for us. He'll tell us what's going on in dealing rooms. We'll also get our technical expert back with us to give you a couple of trading ideas. Welcome back. The street is sensing something, it appears. The markets have actually cut its losses. And in the last few minutes, I think a couple of stocks have stood up. You have Shriram Finance has moved to the high point of the day. So good move out there. You have Bharti Airtel ahead of its numbers. That as well is moving like a thug. Well, good move out there. And you have Tata Motors that was trading in the red. That's moved into the green. So there are a few movers from the Nifty pack. Now down only 50 points. But as promised, Nimish is standing by. He's going to tell us what he's picking up in D-Street Chatter. Nimish.
Hi, Nigel. So today's surprise could be a positive number from the large institutions. So that's the overall sense that I'm picking up. The volumes have picked up, but it's on the but they are better buyers. So that's from a flow perspective. But again, it's been extremely choppy for the last many days, and so is the case today as well. A bit of geopolitical risk, a bit of risk towards the US as well. That's putting some bit of pressure on the Indian markets for the last many days, and so is today. From a range point of view, I've been talking for the last few days that it's been that 600, 700 points range. The Nifty seems to be, it has to break out on either side for a decisive move. That's not happening for the last many weeks now. So I think for today, the big takeaway is that maybe you'll see a positive number from the larger institutions. Technology, financials, and select large cap is where I sense there is a bit of buying interest back from larger institutions. So that's the space to watch out for. But broadly, while it's been pretty much range bound, seems like today's a day of a bit of better buying from large institutions.
Nimesh, this buying at the FI desk, is it linked to the Paytm block deal? Were they buyers in that, or is it even outside of that we're seeing a pickup?
I would say X of Paytm block, there is buying interest. And as I said, the buying interest is largely into technology stocks, financial names, and select large caps. So it's not like across the board, but there is buying X of Paytm as well. So that's from a flow perspective. From an individual stock perspective, the first stock on my list is AB Capital. That was a big mover yesterday after the earnings. Today a bit soft, but I understand there could be a large block deal in AB Capital very soon. There's an alternative fund which owns close to 3.5%, and they could be the potential sellers in AB Capital block. So that's the first name. The second stock is Nesco. While the stock has been consolidating of late, I understand there could be some strategic or a corporate development in Nesco very soon. So that's the second stock. The third stock is Axis Bank. The stock has been under pressure and has relatively underperformed the financial names. But my sense is that large part of the selling from a leading long-only fund seems to be largely over. And small buying has emerged from larger HNI desk is the sense on Axis Bank. So that's the third name. And the last name is AU Small Finance Bank. Again, the stock has seen a bit of volatile moves in the last many days. But from a flow perspective, there is buy flows from larger HNIs. And for AU Small Finance Bank, the next big trigger would be the approval of the universal banking license. So that's going to be a big trigger to watch out as far as AU Small Finance is concerned.
Thank you very much for that. Bharti's numbers are post-market hours. So on a consolidated basis, we already have the Airtel Africa numbers. Those were very strong because of the Nigeria tariff hike. So Airtel Africa was strong, but on the flip side, Indus Tower was a bit disappointing, particularly on the margin front. So the street is going to watch the India wireless performance. And over here, the company seems to be losing subscribers, not losing subscribers. The subscriber addition momentum is lower compared to Jio. So maybe they're losing some market share because as per the TRAI data, Bharti Airtel has added about 1.2 million subscribers in Q1. Jio was at more than 7 million. ARPU could continue to tick up bit by bit. So 250 is the poll versus last quarter's 245. So we'll watch for Bharti Airtel. But Mitesh is now with us for a few BTST calls. Mitesh, anything on Bharti Airtel? And generally, markets have seen a little bit of a lift from 24,600. We're now up to 24,660.
I think that's because of the fact that we have an event coming up, and it's not exactly a tariff-based one, but the monetary policy-based one. And I think the bank Nifty has also cut down its losses. Maybe going into the event, and that's my advice as well. Don't carry heavy positions. But on the stock side, Bharti I think has recovered well. It's managed to get past 1900, 1915 zone. I think as long as above that, good chance that we could see 1950 on the upside. And on the stock called Solar Industries, one of the stocks which I like, that's a VTST. Keep a stop below 14,780, look for a target of 15,300 types on the upside. And a VTST on TVS Motors, which is closing at a fresh high. So that's a VTST with a stop at about 29.70 for targets of 30.10.
Okay. All right, got that. Mitesh, thanks very much for all the trading advice today. We'll see you again with the market bright and early tomorrow morning. Bright and early tomorrow morning also we'll have a new listing, and it's an important institution, part of the market infrastructure setup of the country. And we're talking about NSDL finally making its way to the listed public markets. Vamakshi is here with a lowdown on the company and what perhaps potential investors can expect. Vamakshi.
Well, absolutely. NSDL is set to make its D-Street debut tomorrow at the upper price band. NSDL will command a market cap of around 16,000 crores with listings slated exclusively on the BSE. In fact, the IPO overall was subscribed 41 times with a subscription of 104 times in QIB category, 8 times in the retail category. So let's actually decode NSDL. Now, it was set up in 1996. It is India's very first securities depository and remains the largest. It oversees the highest number of issuers, active instruments, and total asset value under custody. Think of it as a bank, but for securities. So your stocks, bonds, mutual funds, and more, all safely held in demat form. The business, however, goes beyond the depository. Now, NSDL runs 2 wholly owned subsidiaries, NSDL Database Management, which delivers e-governance and tech solutions from SEC Online Insurance Repository to digital onboarding. And the other one is NSDL Payment Bank, which offers digital banking, prepaid cards, merchant acquisition, and third-party product distribution. But NSDL doesn't operate in isolation. It's actually locked in a duopoly with CDSL. The differentiator? NSDL leans more on institutions and unlisted companies, while CDSL thrives on India's booming retail wave. And the numbers actually tell the story. Now, in FY25, NSDL reported a revenue of 1,240 crores, growing at an 18% CAGR since FY23. Yet the margins lagged 26.4%, with profits of around 343 crores and an ROE of 17.1%. CDSL, on the other hand, with a smaller revenue base of 1,082 crore, delivered 527 crore in net profits, a margin of 57.7%, much better than NSDL, and a stellar 29.9% ROE. Now, valuations are actually reflecting this trade-off. At 47 times FY25 earnings, NSDL comes in at a nearly 24% discount to CDSL 61 times. And, just to wrap it up, NSDL is a story of steady growth with leaner profitability that is being reflected in its current valuation discount to CDSL.
Thank you very much for that. Very well explained. Look at Gokuldas. Stock is down 9%. That overhang of tariffs on the entire textile remains. But at the bottom line in Q1, the company seems to have delivered okay, 52% growth seen. But the other big Q, and the big one, is going to be the RBI MPC, which will announce its interest rate decision tomorrow. The CNBC-TV18 poll shows the market is divided between a cut and a pause. Ritu is here to tell us more and what to expect.
The RBI's August policy meeting is shaping up to be anything but predictable. A CNBC-TV18 poll of top economists shows a clear split. Half expect a 25 basis point cut, while the other half say the MPC will hold rates steady. But zoom out and look at the broader macro picture and you'll see inflation has dropped to a 77-month low. CPI is likely to average below 3% through the year. And so some, like SBI, for instance, warned that not cutting rates now could be a costly type 2 error, essentially waiting too long and hurting growth when inflation is already under control. But most economists, that is 70%, see the terminal policy rate settling at 5.25%, which means one more 25 basis point rate cut is going to wrap up this easing cycle. On the timing of the rate cut, the poll is split. 30% say August, another 30% October. December leads at 40%, but signaling we're near the bottom either way. On the stance, though, there is no ambiguity. All expect RBI to stick to a neutral stance. But speaking of growth, here 70% believe RBI could leave the forecast unchanged at 6.5%, though the street does expect RBI to flag signs of slowing momentum. On inflation, 90% expect a downward revision to RBI's 3.7% forecast, possibly to around 3 to 3.3% because of the easing food prices and the favorable base effect. As for the tone, 60% expected to stay neutral, but 40% are leaning towards dovish. But the wild card in all of this is tariffs and trade tensions, where half of the economists see no policy impact, while 40% do say external headwinds can push RBI to ease further, but they do agree mostly it's still a wait-and-watch game. Finally, do keep an eye out for the revised liquidity management framework, any commentary on the growth narrative, and the possible extension of the EBLR, which is the external benchmark-linked lending rates, to NBFCs as well.
Okay, so that's the RBI policy, and we are awaiting all the action tomorrow. By the way, remember to tune in to the all-new CNBC TV18 Prime. We, of course, bring you insights from policymakers, business leaders, and economists shaping both world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back. Well, we have Jay Bal of Cash the Kiosk who joins in on the show. Hi, Jay. You've been quite positive on the Nifty, but the Nifty has seen a full correction of around 1,000 points. Where is the crucial support level, and would you be a buyer post this recent pullback?
Hi, Nigel. The support now been projecting 24,400, and that still remains the focus for the market. The markets require either one more lower low below 24,535. Or possibly two lower low. Depends on what the markets do in the very short term. The markets were to go to 24,750 first before breaking 24,535. The market will probably reach only 24,400. But if 24,535 were to break first before 24,750, we could see further low closer to 24,000 mark. So what the very short term becomes quite important. In the longer term, my view remains unchanged. Bullish for the long term, fresh all-time highs from 6 to 12 months perspective, somewhere close to 29,000.
Okay, all right. Any individual stock calls you have for us, Jay?
Yeah, I'm positive on the auto space. As you can see, TVS Motors is clocking fresh all-time highs. The signs are there in Hero Motors too. I'm bullish on it with a stop loss of 4,200, anticipating about 5,300. the Nifty Auto Index crosses 24,200, the whole sector will start to rise. And I have a logistics stock as a second pick. Western Carriers, the relatively new listing. Stop loss of about 101. I know it could go back to its post-listing highs of about 170, but we can keep it conservative and anticipate about 150 with a stop of 101.
Okay, Western Carriers, 150 is the target. Want to give us one more?
Yeah, you can look at something like a Bajaj Auto, but it's again will be preempting the move. Yeah, so look at things on the positive on the auto space and even on the metal space. But we need a breakout to happen. So we are looking at something. Look at auto space and metal space.
Got it. Okay. All right, Jay, stay with us. For the time being, I think we need to wrap down on the markets. Well, it was a day when the Nifty goes home in the red, but actually, X of the, some heavyweight names, the Nifty did pretty okay. The problem today was big names like Reliance Industries, Infosys, and ICICI Bank. All of them went home with cuts of around 1 to around 2%. And because of that, in fact, the Nifty continued to remain under pressure. But the breadth of the market wasn't too bad. You had one stock